Well, good morning, everyone. This is Brian with Trade Masters, trying to get a kind of a quiet moment here early in the morning to give you guys some information regarding a trading plan. Again, trading plans are individual. I will give you some guidance as much as I can. But welcome this morning. If you have any questions at the end, definitely reach out to us at support@trademasters.com. With that being said, this is a trade plan building session regarding Tide Fusion. Now, any trade plan could be with any strategy, but we're going to focus on one strategy alone. And let's go ahead and dive in. I would encourage you to stop the video when you need to rewatch it, take screenshots, take notes, anything like that. We're going to try to spend 30 to 45 minutes at most trying to get you guys a foundation. So, welcome again. Today is not going to be about finding the perfect trade. That's not what we're doing today. In this case, it's going to be about building a simple written trading plan that you can continue to use that's steady when your emotions want to kind of take over. We want to be very mechanical. And just so you guys know, we've all been there. You catch a great move at some point, and then all of a sudden you give half of it, excuse me, you give half of it back because you didn't know exactly what to do and how to protect that profit. So those things happen. Or another thing, you take a string of losses and you start scratching your head thinking, what's going on? And then you get the mindset of make it back, which is that revenge trading stuff that we talk about. Um, I would just say this tide fusion is very simple. But the plan is what makes it repeatable. And the plan is going to be uniquely different. So by the end of this session, my hope is, and our hope is Trade Masters, that you get a clear kind of step-by-step tide fusion process, I guess you'd call it, and a menu kind of of how to exit, options that you can choose based on your own comfort level. So I want to make sure we try to do that. And again, questions are welcomed. All right, so you are not alone in this. If this feels like you, just know that you are absolutely normal. Most traders don't struggle because they can't spot a trade. That's the easy part. We struggle because the hardest decisions usually happen when real money's on the line. Then you talk about position sizing, where to put stops, where to do profit protection, and where do we do our exits. And so it's not spotting a trade. So that's the easy part. And this morning, what we're going to do is answer two big questions because these are the two main questions that people kept asking. How do I not blow up my account? And what do I do once I'm in a trade? My goal is to answer at least those two questions with simple written process that you can do. We're going to do it in a way that's hopefully adaptable for you guys because let's just be honest, there's no one single optimal way of trading or one optimal exit for everyone. It's just not there. Some people sleep better taking profits early. It's just the way they are. And others want to run the winners as far as they can go. But just know that the plan should match how you're wired with some sort of personality in that. So just be aware that there is no optimal trade plan that I can give you that you'd be able to follow. It needs to be something that's generated by you because that's who you are. Let's go to the definition of what a trade plan is. Very, very simple. You've all heard it, and that's not why you came here to find a definition. But with that in mind, we want you to hear this clearly. An exit strategy is not something you want to figure out while you're already in the trade. You're already late. If you're trying to decide exits on the fly, your brain will default to a fear, greed, or regret. It's just who we are. So anytime you get into an exit, because that's really what it is. Trade plans are really you do know your setups, but it's really how you're going to manage your trade when you're in it. And so don't once you get a signal with tide fusion, just don't take the trade and hope and then try to figure it out. Have a plan. So we define the plan right up front, what to trade, what a valid tide fusion setup might look like, how you want to size your risk, and what will you do when the price goes our way or against us. So you want to make sure that we're answering these questions that what a good plan has. So I want to make sure validation, how much risk. Yeah. So those are the key questions of a trade plan. So I'm going to give you a one page, and this is one you probably want to take a screenshot of. This is kind of the heart of today's session. It's one page. If the plan, and I will tell you, my first initial trade plan was over 45 pages. It may have been even more than that. If it's over 10 pages, you're never going to use it. You're never going to use it because your adrenaline won't be allowed to. It won't. Uh, it's just too long. Once you get emotionally attached to a trade, it's too long to go digging through. So you need to have a very, very simple one-page type look, and the page should have the answers to the questions that we have shown on the screen. What is your market? What's the time frame you're going to be trading? For Tide Fusion, we're doing the currency market at 4 hours. Is there certain pairs that you trade? Don't trade them all because that's bad. What's your routine? Is there a no trade time for you? All these things need to be lined up for you to be able to build your trade plan. This is a step-by-step, high-level type thinking before you get into the actual trade. So what you trade and when, what a valid trade Tide Fusion setup looks like, how do you size and where does your stop go, what's your risk guardrails, what's your management. This is and the exits. This is the part that most traders will skip. What's your tracking mechanism? What's your weekly review? If you do nothing else, uh, build this page. That's what the key. If you build this page and put it next to your charts, put it on a wall, print it out, however you need to do it, this is the key page. It's simple enough to follow, but it is definitely enough to protect you as well. So take a screenshot of that, pause it, answer the questions, and that's your baseline foundation for your trade plan. So here's the steps. This slide answers the step-by-step process that some of you have already requested. The key is that Tide Fusion is a loop. It's not a one-time checklist. And that would be the same thing with Sentinel. That would be the same thing with any of the tools that you guys or strategies that you're using. It, your trade plan is an ongoing, living, breathing thing, but there's pieces of it that don't ever change. Okay. So the key again is to understand this is a loop. You go through this preparation piece, you get your context. Okay. And then we go to filter, which we talked about that in our town hall clarity. Get your clarity, only trade the conditions on your plan. And then your planning part, step three, this is your entry, your stop, and your stop target. And basically, what a stop is your trade is invalid. That's all it is. It's not, don't think of it as a loss. It just means that's the part that's considers your trade no longer valid. This is also step three that has the targets and your position size. Then step four is your when you execute the trade. This is the easy part. However, with Tide Fusion, we have the tendency of still wanting to chase things. You need one clean entry. Don't chase anything. And Tide Fusion makes it easy to not chase if you follow your rules. And then number five, manage. This is a part that we talk about a lot. Um, and you have to have your written profit protection rules, and they're individual. I will give you some things to think about, but there's absolutely zero way for me to create a trade plan for you when I do not know what causes you not to sleep at night. What's your balance, your account size? What's your risk factors? What is your objective in your trades? Are you happy with a 1-to-1 ratio? Are you happy with a 1.5-to-1 ratio? Are you happy with a 2-to-1 ratio? Are you going to trade? Is your stop going to be the pivot low, or is it going to be a certain price away from current price? I can't tell you that. That has to be your determination. And then you need to log those trades in while they're fresh in your mind. It takes maybe 60 seconds to do that. And I'm going to show you a way you can do that very, very simply. Then make sure you do a weekly review for patterns if you see some things in patterns. And I don't make any changes until at least 25 to 30 trades. Uh, Very, very small changes at most. Don't make any big, large changes because it's not Tide Fusion, it's not Pathfinder, it's not Sentinel. It usually comes down to minor things in your trade plan because while I'm looking at a screen and being profitable, you may be looking at the same screen and not being profitable and wonder why. If we're both looking at the same system, then it's not the system. Okay, so when traders blow up their accounts, it's usually because they skip their plan or they skip their management or they get FOMO where they have to jump into a trade too quick and they feel like they missed it because of the alert. The nice thing about Tide Fusion, it's on a 4 hour chart. So when you get an alert, you got a little bit of time. You don't have to rush. And I've shown you guys where I've taken an entry 2 candles after the alert and it worked out just fine. Do they always work out that way? No. We're not looking for 100% correct. We got to get that out of our mind. So that is our step by step. That's another good screenshot should you want to take a screenshot. So there is rhythm. Okay. I want to be very, very clear. The 4 hour boredom is dangerous. Okay. It's dangerous. It's good, but it's also dangerous. With Tide Fusion and 4 hour charts, the rhythm becomes very, very simple. Check at consistent windows. Don't watch it. Okay. Look every other 4 hours, every 8 hours. Scan for tide fusion conditions that you've defined, and then plan that trade, set it up, and then get out of your own way. I'm a set and forget kind of guy. The tendency with 4 hours, especially if you've been on a day trading session, you're going to want to micromanage a swing trade, which you will end up causing it to lose. Okay. Don't be a micromanager. A swing trade uh, is kind of uh, a patient, disciplined. You don't want to micromanage. Just let it be. Okay. You do need to have a trade plan. You do need to have an exit plan. You could have a trailing stop plan, but those are all planned way before you jump in where you won't micromanage. Okay. Because we have a tendency of micromanaging things. We got to sit and watch and manage it. We don't know the future, so don't micromanage. Your job is not to watch every candle. It really isn't. Just follow the plan. Let the market do what the market's going to do based on you've already done the work and accept the loss if it happens to be a loss. Okay. So step one, here's our step one of preparing for our 5 minutes. That's step one. This is where you take a deep breath, and this is where we're going to show you some empathy because we've all entered a trade and then realized there was news 10 minutes before. Now, again, this is a 4 hour chart. I'm not near as worried about that news, but I want to keep a big picture here just in case you're using this for any of your Hawkeye Sentinel sessions at all. Understand where the news is at. So we want to build a simple ritual. That's all we're going to do. Every time we do a time savvy trader session, the first thing I do is go over the disclaimer, then I go over the news for the week, then we dive in. It's the same thing over and over and over. But boredom can be dangerous. You still need to be consistent. You don't need to be perfect. You just need to be consistent. The prep is also where you reduce the random trades when you are preparing those random trades. And a lot of times with Tide Fusion, I'm not doing any real prep anymore. Beginning of the week, I'm looking to see what's happening, and then I'm waiting for the environment to present itself. So you choose your environment, you choose your pairs that you're going to trade. You're going to choose your bias before the chart starts whispering at you. Okay, so your checklist is high impact news. Avoid entering right before it. Don't get right before it. Give it on a 4 hour chart. You won't see it as much, but be patient with it. Be cautious with it. Maybe say 30 minutes before an hour, 30 minutes before, 30 minutes after. I won't trade the news. That's usually pretty good overall. And pick your watch list. Don't have more than 8 pairs. I would say with Tide Fusion, six is at most right now because we've historically backed that. Because we want to be very careful how we pick our pairs because there's historical pairs that don't trend well, and Tide Fusion is a trend system. So, and then always confirm your risk settings for the day. Always. So what that means is if you have a calculator and you say, well, I've got $2,000 in my account. Well, if you made a missing trade the day before and now your account's 1,800, don't risk for 2,000. Update it, risk for 1,800. And the flip side of that, what if you were sitting on 2,100? Then your risk needs to be based on 2,100. That's how you compound and grow quickly. So before you even look at those entries, decide that environment that you're willing to trade in. That'll help you avoid most of those bad trades. But common mistake, and it's less with Tide Fusion, is jumping entry signals, being too quick. and not getting the signal setup that you want. But this prep step is the step that's going to help you avoid those random out of the norm jump in. Step two is our filter system. Okay. A filter is kind of what makes that plan feel simple, which is what you want. It turns thousands of possible trades into just a handful. We're not looking for, again, we're not looking for quantity, we're looking for quality. And that's the big key. We're not looking for the 100% return today. That would be great, but that's not realistic and that's not sustainable and that's not repeatable. And that's what we're looking for. So here's the emotional part. Most blown accounts, we talked about how do I not blow my account? Most blown accounts come from those almost trades, trades that didn't quite meet your rules, but you took them anyway because you were afraid of missing out on a potential move. That's what it is. So give yourself that permission to say no on the trade because that's trading maturity. I have a hard time with this too, so that's not abnormal. So trade only your time frame with Tide Fusion because there's calculations on the 4 hour chart that aren't going to align quite with the 1 hour. Now, does that mean you can't drop Tide Fusion down to 1 hour and use it for some other thing? Sure, you could. Just remember the numbers you're using, the calculations behind it are really set for a 4 hour. Trade only in the direction your plan defines. Are you going to be a counter? Are you going to trade every signal up and down, or are you going to be paying attention to what the overall trend is and stay with it on the higher time frame? That's completely up to you. Some people trade all signals, and that's completely up to you. Trade only when your signal and checklists are present. Make sure you're doing that, and then only add to your trade only the risk rules allow a new position. Don't add unless you really know what you're doing. So a no trade, giving you some ideas, things, those almost trades we were talking about. I put a clear options here. I don't mind the news personally, so I'm not worried about that. You may be, and that's perfectly. We definitely want to avoid that chop though, when there's no clear structure. We definitely want to avoid those trades where our stop is way too wide. You don't have to take if that pivot low is just way too far, and you have a wall in front of you on a long position that only allows you to go to 100 pips, and your risk to reward ratio is 100, 1 to 5, 1.5 to 1. Then you only have to take a 50, walk away, and if your stop is too far, don't take the trade. What if you're emotionally off that day? We all have those days. And it's mainly need to win, boredom, tired, angry, upset at the kids, their grades are bad. Anything of life gets in the way. If you're not emotionally attached to this, the cool thing about a 4 hour chart, it's not near as intensive as your day trading. So you can be a little off and still be okay if you have some rules in place. And another thing, almost trades, you've already hit your daily or weekly loss limit. Don't add to the losses. And I would even encourage you to consider a daily or weekly profit um, marker. Whether that be 3% for the week or 1% for the week, because we're really looking for 3 to 6% per month for per pair. Okay, that's what we're looking for. We're looking to beat those hedge funds, is what we're doing. So don't overtrade. You wouldn't think it's possible on a 4 hour chart, but it is, especially if you start putting 5, 6, 7 pairs together. That's overtrading. You don't need that many. Hopefully that helps. You can definitely take a screenshot if you haven't already done so. And then step three. And I put an actual chart here of a trade that we took, and it worked out real well. And this is just one thing you can do. Remember, don't look into, well, I could have let this run. That's hindsight based on what you've seen already happen. You don't know what's going to happen. So step three is the big emotional shift. So we plan it first and then we trade. The stop is not how much pain can you handle, although that's how sometimes we frame it. It's actually where your the trade setup is actually proven wrong. It's called invalidation. And it could match up to the place how much pain you can handle. Uh, but it's really more importantly, where does your trade become invalid? That's what's going to give your plan integrity. Think of it in validation. Where do I go that my trade is still a 4 hour trade, still a swing trade, but where is the most reasonable place of invalidation. It could be a pivot low. It could be a Sherlock supply or demand zone in this case that's sitting there. Multiple things. It could be an Atlas line that you want to be just below, just as a warning. Brokers do know where your stops are at, and they know human nature, and they know support and resistance. So give yourself a little 10 to 15 pip wiggle room below those areas, just so you're not sitting on top of where everybody else is when they get tapped out. So, how it's not how much you can handle, although that's kind of the mindset. It's really where's the place that your trade would be proven wrong. If it's feasible and it's reasonably close to your entry and you have a target that's not being impeded by a support or a resistance area, then you go into the trade. So we size the position so the dollar risk matches your rule. I'm going to say 0.5%. Start with a 0.5%. You're not going to make a lot of money at first, but you'll get confidence in the strategy before you start blowing up your account. And then when you get 20 to 30 trades under your belt, go to 1%. And if you feel real confident, you're seeing, 45, 50% plus win ratio, and you're properly doing your management, you're going to be profitable. And maybe you jump it up to 1.5. I would never go more than 2 to 3 at most, depending on how risky you are. 3% is big money in a swing trade. So be careful because it's the flip side of that is also the stop. So you plan in the order your trigger, what's going to trigger you, what's your stop, what's your position size, what's your target, and then the hardest one is your management rules. We'll talk about that here in a moment. If you can't write the stop in the exit plan, you're not ready to trade yet. Okay, so be very, very careful. We write the exit plan. Your exit plan can be partial products taken off, profit taken off. I keep saying product. Partial profits being taken off. You could do a trailing stop. You could do a set and forget and let it be what it is. Uh, and you want to consider what would make you want to enter or exit early. Why would you want to exit early? Because we definitely want to run our trade as far as we can. Um, if it's a 2R or a 1.5 hour, and you're set and you're ready to go, mathematically, if you're running a 50%, um, that's about 48% actually. If you're running 48% win ratio and you're running a 1.5, 1-to-1 reward system, you're profitable. It doesn't take much. So there's mathematical calculations behind that. There are numbers that say that 2R is harder to accomplish in the long term. And so happy medians, maybe you say 1.6, 1.7. It's all personal preference at that point. So here's the big question, step number 4. How do I not blow up my account? And these are those non-negotiables. Uh, Golly, this is this is where we just kind of say risk rules are not advanced. This is where you survive. The reason we ask you to pick your own numbers is you can emotionally follow it because a plan if it's not your plan, you won't follow it. It's a wish, okay? Pick numbers you can emotionally follow, okay? Because the plan, if you can't emotionally follow it, it's a hope, it's a wish. So you can start small, okay? Get your win consistencies up. We just talked about that. And I gave you an option. So core risks, how do you not blow it up? Pick a risk that you're going to willing to risk. Okay. What's your max open risk? Two trades or 1.5% total open risk. I do two trades, two pairs at one time. That's my max. It's easier than me trying to do a mathematical calculation. However, we have some major math people that like the number part, and that's fine too. What's your daily stop trading? With a 4 hour chart, it's a little harder to do because sometimes we carry over. So you're going to have to find some reasonable. Now, I would not say 1% is reasonable to me. And the reason being is I risk 1%. That means if I miss one trade, I'm out. I'm going to go two trades. If I miss two trades in a row, I don't trade the rest of the day. Now, like I said, with a 4 hour chart, that may be going into the next day. You have to be determinant that for yourself. Weekly, again, I don't want to miss if I'm down 3% in a week, I'm going to stop. That's three chat trades. Our trades don't come around that often with tide fusion. That should be 3 in a row wrong. Does it happen? Absolutely. Statistically, mathematically, there is a flow to the market that you can have 3, 4, 5 trades in a row wrong. Okay. Just as you can have 3 to 5 trades in a row right. So you just have to be able to know what your weekly stop is going to be and write it down. No exceptions, no revenge trading, no FOMO. We got to avoid those. I got to make it back when I have a losing week. You're going to have losing week. Get that in your plan. You're going to have losing week. Okay. You do not need to win something every day. You just need to trade the plan that you've written. Okay. That will help you get rid of a lot of emotion and you'll get bored. And that's where the community comes in, just having conversations with each other. Don't let the trade be your dopamine. Let the community be your dopamine. Talk about anything. Uh, it should be very, very boring. Okay. And why risk rules exist. This is drawdown math. Okay. I would just say with proper risk management, Tide Fusion won't have a lot of drawdown. So this is kind of more for your day traders. This is for position trading where you don't know where your stop is, but I'm giving you a system where there's not going to be a lot of drawdown. But we've seen in other systems where they don't tell you exactly what the drawdown is. All you see is the win rates. And they're earning, 10, 15% per week even. But you don't know what the risk is going into it. So this slide is about intuition. And we've kind of come to the phrase that everyone's different. Everyone's different. I am willing, and I taught my fourth graders this, with a position holding and even a long-term swing trading, I am willing because I know my system to take a 20% loss. But if I'm willing to take a 20% to 30% loss, I better be willing to get a 45% win. Okay. There are systems that will put your account at 50 plus percent risk drawdown, and they are amazingly good until they're not. Okay. And they could be good. And I'm not saying anything against those systems, but just be prepared. Your job is not to win big. Okay. Your job is trying to avoid big, huge drawdowns. And that's why Tide Fusion just needs your consistent risk. It's already programmed in for you guys. You got to have some stop trading rules. So when you take a big oversized risk, the problem really isn't just the loss. The loss is what it forces you to do after that loss. The bigger the drawdown requires bigger performances just to get back to even. And you don't want that. So we're going to do our best to keep our drawdown reasonable. And drawdown is how you're going to be risking in a row. So like I said, 3% in a week, I can make that up pretty quickly. But if I start having 10%, 14%, 15% losses, it's going to take me weeks to get that just to break even. So be very, very careful to understand what your own drawdown risks are. It's kind of embedded already in Tide Fusion, unless you get real dumb and you don't plan out your stops. So just remember, bigger drawdowns require that bigger performance afterwards just to get back to even. So we want to protect the account with small, consistent risk and hard stop trading rules. That's the key. Don't have a floating stop that's going to move around. So just know if you want to know the calculation behind it, recovery percentages are derived from an arithmetic equation that's required gain, which your required gain will equal your drawdown divided by 1 minus the drawdown. So that's a calculation if you really want to know it. So it's just, in other words, basically you lose 3%, that means you got to get 3% back. And it's sometimes harder. You lose 50%, you actually got to get more. 50% to come recover. It doesn't just recover 50%. You got to keep going. So it gets to be real messy the higher you get. So if you need that calculation, I'll definitely send that to you and you can make your own chart for that as well. What do I do? This is the key. This is really what everything boils down to. And this is the question we get the most from our community and those outside of our community. And it's a question that probably should never be asked. But it is. It's asked. It's who we are. We're human. What do I do once I'm in? Well, you probably should. What you should have done is have written rules before you ever got in. That's number one problem. You're already gambling. So Every management plan, every trade plan should answer the three questions that we have posed here. How do I protect the capital? How do I protect the profit? And how do I stay in winners? And this goes back to your personality trait. And this slide is where the exits become emotional. So one of our traders mentioned, I'm up 90 pips, and I wanted to use his example because it's a recent one. He says, so now what do I do? Exactly what do I want to do? Where would you get out? That tells me a couple things. Number one, I'm hoping he's in demo. But if he's not, it's a great question to ask. That depends. That depends on the chart. That depends on the picture. That depends on your written plans. Um, Depends on your risk. If you risked 150 pips to get the 90, you're to me you're upside down already. But what if you risked 30 pips to get 90? Now you're 3 to 1. I would be strongly considering one of two things. Take the profit off the board. For me, 3 to 1 is a good ratio. Or move my stop to a proper place that keeps me in and let it run up some more. That, or I could possibly take part of the profits off. I will tell you there's some statistics that do not encourage taking partial profits off, except the fact that partial profits do take some of the emotional piece away from you. So that's, again, there is no single optimal exit. It all depends on you. The right exit exists is the one you can follow consistently. So instead of one rule for everyone, I'm going to give you a menu of exit styles, conservative, balanced, those who like to run. And you can go on Investopedia, and it help you plan out your risk to reward and use it as blueprint. There's also Investopedia has lots of stuff on simple exit strategies. So we want to be able to uh, answer each of these questions based on who we are. When, if ever, do I move my stop? I have to have some clear rules to do that. I can move it, but it would have had to move quite a bit. And I'm going to most likely move for tide fusion to the next pivot low. But again, I could trail it by a certain number of pips if I wanted to. There's no right or wrong. It is your strategy. That's why you do 10 to 20, 30 trades, look and see what's happened and make those small minor adjustments. And just make sure you're answering these questions in these three boxes as you go through. And again, today's session is about trade plan. You got to think. We're not going to hand you a trade plan because that would be wrong of us to do because that puts the responsibility and accountability on us. And it's not your trade plan. It's our trade plan that you're trying to follow. So just be real careful with that. Here we go. Here's our possible exit options that you can choose. There again, these are not the only three. These are just ones that I kind of broke down to the simplest base models. Option A is to protect that profit. It's low stress. You bank more wins, so your win ratio goes up. But just remember, when you do that, there's always a flip side. For every risk, there's a reward, and for every action, there's something counter to it. So this slide is a big permission giving moment. So I would take definitely a screenshot of this. If you're a high anxiety trader, then start off by protecting your profit. There's nothing wrong with that. I've been doing this so long, I'm not worried about it. So maybe you take, when it hits 1 R, maybe your target's 1.5 R, and it hits 1 R, you take a small piece of it off and then move your stop to break even. Just understand mathematically, statistically, over the long haul, you will find that many times your price will come right back to the break even spot and you just took a small profit. And what happens is, unless you're consistently winning over a large period of time, your next trade could be a 1% loss. So you took a small percentage, maybe a 0.5% off, and now you got a 0.5% winning and 1% loss. 0.5% winning, 1% loss. You're going to end up being upside down over the long haul, unless you're very specific. So exit remainder at next major level. So you're going to let it run as much as you can. But this is good for new traders. It makes you feel better. So some people feel guilty taking profits too early. But other people feel guilty giving back any profit at all. The truth of the matter, you need an exit style that you can follow with peace of mind for you. So here's three valid options. Pick one of them, write it down, and trade it consistently for a minimum of 30 direct trades before you tweak it. Now, what you will find is you might find that we mix them up a little bit. Maybe you take a piece of the option A, mix it with B. Maybe take a piece of C and mix it with A. Let's just go over it. B is balanced. I always like balanced, but I am with swing trading, I am option C personally. I don't. From time to time I will take a profit off if the picture starts taking changing on me. But most of the time I'm an option C. But if you're most traders take partial at 1 hour, trail the stop under the last 4 hour swing. But remember, you're already setting your stop at a swing low anyway. So it needs to create a new pivot before you can move that stop. So still waiting on it. So exit on an opposite signal or a hard trailing stop. An opposite signal will be something like if you're going long, an Atlas line above possibly, or a Sherlock zone above possibly, or maybe there's a big wall on the weekly or monthly chart that you're aware of that you want to get out before. Just make sure that you're not risking more than you need to get to that target. And then again, the simple for me is option C. It's pretty much a set and forget. I can hold on to it for a long time. That's because I am confident in tide fusion. So the truth again is that you need an exit style that you're going to be able to follow. And these are the three possibles. You can also, again, you can go to Investopedia and check out exit strategy planning for some other ideas. But these are the three I would consider for right now. Simple, easy to follow, make it your own. And then, so here we go. This is my 90 pip example. This is a trade that it's not the trade he was talking about, but it's a trade nonetheless. You can see my pivot low. I have my entry right here. I got in with my signal and I put my stop 10 pips below the pivot low. I could, as it moved up to my 1R, move my stop to 10 pips below this pivot low, but it's not very far. Okay, so that's what I'm saying. I'm going to gain 20 pips. I am lowering my risk, so it's not bad. Again, it's not bad. But this is what it looks like. You could take at 1R, you could take the profits completely off and be done, and or you could take a partial off and let it run up, and you took the rest off here, or you let it run up. But right, this particular trade didn't give you an opportunity to move your stop up very much. So you might want, and when I say break even, I like to go to break even plus a little bit. Okay, just a little bit. So when I break even, I'm paying for my commissions. Again, you can take that exit there, and then you'll take a little profit there. That's a nice way to do it. It's a slow grow, but just know there's no single correct way to do it. This again was asked in our community, and so here's what I want. Our answer isn't exit at 90 pips necessarily. That would not be a responsible way of handling. Instead, you want to decide the exit before you actually get into the trade. If you're a protect profit type trader, you'll be happier taking partials and trailing your trailing that price tighter. Maybe you trail it 2 ATR behind. So if the ATR is 30 of that particular pair, you want to trade it 60 pips behind. There's nothing wrong with that either. It's a little tighter than I go, but hey, more power to you. Again, there's no wrong answer. If you have a suggestion of an exit and you're just not confident, ask me. Say, hey, I've thought about this. Would this work? Most likely it would, but we can go back and check. If you're a runner trader like myself, you'll be able to accept more give back. I don't mind it pulling back on me because I do want to catch the larger swings. Okay. The key is just consistency. Trying to exit to your try and tying that exit to your written plan. This brings you that clarity we talked about, structure. Your written rules shows where you're going to exit, opposite signal, maybe Atlas, maybe Sherlock, things like that. And you can always take a screenshot for this because this is a great picture of what you'd want. I'm not so sure I would do a 2R. I like that 1.5, and I'd be in and out. And then I can always re-engage again. It's not like you get a one and done. They're going to happen all the time. So here's your trade management decisions tree. So this is kind of giving you a flow chart. This is what you've done when you're in the trade. And traders often ask for one perfect exit. There's really not a real answer for that. The real improvement comes actually from having some sort of decision tree that you actually follow. I call it a contingency plan because there's always something that pops up and I have to add to my trade plan because, oh, that's never happened to me before. But there are some things that always happen, and these are what you want to know with a tree. Notice what is not on the tree. Not one place do we say widen your stop. Not one place do we say adding to losers. Now, if you are a trader who likes to scale in, just know I would rather you I'd rather you scale in on the positive side than scale in on the losing side. I've done the scaling in on the losing side because I know what I'm doing with it. But as a new trader, I would never. If you've listened to Martingale, Martigale, a lot of people will do martingale strategy. I use it to an extent, but it's not. I'm not adding to losers. I'm very, very specific on how I do that. That's for another trade session. But don't make plans to add to your losers. Um, and you won't find anywhere on this chart move targets because you're afraid. If you're going to move targets, move them further away from your entry, and letting that run. Okay. So if you get after your entry, do nothing unless something happens. If price moves against you, leave the stop where it's at. Don't widen it. If it hits the stop, log it and move on. That's the way it goes. If the opposite tide fusion signal appears, exit per the plan. If you get a buy signal on tide fusion, followed by a sell signal, four, five, six candles there, exit your buy signal, go into the sell signal. That's an option. Not that you have to. If you're going to trade every signal, that's what you have to do. Don't be in buy a long and a sell at the same time. You're going to end up wiping yourself out. So what if price reaches 1R? These are options you can take. Take partial profit. If the trail is hit, it will exit the remainder for you. These are very, very simple what you're going to do. Okay. If price approaches a major level above you, consider taking partials or tighten up your stop. You can do that. If you're tempted to guess, pause, read your plan, go get a cup of coffee, ask Al and I to talk you off the cliff. If it's not written, don't do it. Okay. That's the key. And these are very, very simple decision tree plan. And then we get the do not touch. Again, I mentioned what's not here. Don't ever widen your stop. That's just a recipe for disaster. This is my pastor moment. This is my coaching moment. I don't want to be preachy here, but in our group, our goal is to clarity, structure, execution. We're really this year in 2026 calling people to more discipline. No excuses, accountability, responsibility. We've all widened our stop in the past and we've watched it snowball. It's what happens. We've all taken one more trade after a bad day. We've all done it. So we want to write these down or take a screenshot and print them. They aren't about being perfect. They're about protecting the account and building the trust within yourself that this thing works. Okay. So never widen your stop. Never break your daily, weekly stop rules. Never add to a losing trade, and never change the exit rules mid-trade without having a. Don't trade. Yeah, don't change your rules. Don't go, well, I think this, I'm going to feel this. Your feelings will lie to you. Okay. They will lie to you. That's my pastoral side. I'm trying to protect the flock. Again, this is a simple a tracking journal. It's not comprehensive. I have a better one if you're interested in it. Most traders don't have a performance problem. They really don't. They have a tracking problem. They have no idea what they've been doing. And I've noticed in the Hawkeye session in the mornings, they've been going over spreadsheets. Um, so that's a good thing to do. When in doubt and you can't make a trade, fix your spreadsheets. If you can't see your patterns, there's no way for you to fix them. Okay. And like I said, it's usually not the system, it's the person trading the simple system. So keep it simple, record just the essentials. And if you can, add a screenshot to it. That always helps. The most powerful metric early on is your plan compliance. Did you follow your rules? You'll hear that quite a bit. So here, let's review these metrics here that this keeps the traders from obsessing over their win rate. Everybody wants to know the win rate. Okay. So one of the things we want to include in our metrics of how we analyze ourselves, did we follow our rule? 100% is what you're shooting for. Okay. If you made one little change, but it was a big one, then you can't give yourself 100%. We're going to be able to calculate our average R. Are our winners big enough to overcome our risk? You need to make sure your average R wins is over your average R losses. You need to find out what your max drawdown is going to be. And is this keeping you survivable? So win rate alone can be misleading. So don't get caught in these advertisements about my win rates, 90%. I've seen win rates of 90% lose money. What matters is whether your behavior is consistent and are your losses being controlled. We want traders to make sure that they become more process oriented. Faithfulness over that frenzy. Okay. And so here's our weekly review that we can do. It doesn't take a long time. Again, swing trading shouldn't take you a long time, but you need to be treating it like a business, not like a hobby, not gambling. This is how the plan becomes personal. You don't redesign your whole strategy every week. That would be foolish. You keep what's working and change only those things that are unclear and drop what you know is consistently bothering you or hurting you. Do it with humility and patience. One small adjustment at a time is fine. So, what worked? Which setup paid? What did you do well? Make those notes down in your journal. What needs tightening up if you think? What's unclear still for you? What's hurting you? That's the big one. Change one thing at a time. Give it 20 to 30 trades minimum before you judge it. That could mean a month worth of trading before you judge it. Because I've seen traders go, oh, I'm trading your system. I'm only winning 30% of the time. That was a week maybe. And then they're done. They walk away. This doesn't work. That's number one, you didn't have the right rule. Number two, you didn't have the right mindset. And number three, you didn't understand the system. There's no way you can understand it. So be very careful to give yourself grace over time. You are learning a strategy and a system, no matter what, if it's Tide Fusion, Pathfinder, whatever it is, Sentinel. And so here we go. This is a well thought out one. So one of our traders asked, I don't really even know where to start. And this is going to give you a template for uh, where to start. The point isn't which one is best, by the way. The point is choosing one you can follow. Okay, so obviously the starter, again, make it adaptable to you. Choose a starting level. That's completely up to you. And as your confidence grows, you can always adjust it. Wait 20 to 30 trades and then adjust that simple thing. So maybe you're starting with a 1/4% risk because you're scared. You think you're going to lose. And then over 20 trades, you said, well, okay, we're profitable here. Then go to 0.5% and so on until you feel confident in moving forward. So again, the starter and the strict, you can see are very, very similar, very, very similar, but they're not the same. Okay. And then we go into some free resources that you guys can use to find out more about stuff. I would not pay for a spreadsheet. We've created some that you can do. However, I would include in my spreadsheet. I would also, as we move to, especially move to MT4, since TradingView, if you're only doing TradingView, you do not have the ability to connect your account to MyFX Book, TraderView, or FX Blue. Those are those options that you can connect your account with, and it tracks some of the facts for you. Um, just be careful with that stuff. But you do want to track it. And so we'll get into that part later on as well. A trading view paper trading, that's always good. All these things are good to go through. These are just some extra resources. And then build your one page plan today. I want you to take the time, think through it, go through the video again, write the rules down, try to keep it to one page, use the template that we had early on in the session. Use the checklist for every trade, track and review. Spend 15 minutes. You can review it on Saturday when no market's going on. Again, you don't need to be fearless. You just need to be faithful to that plan. This is the action step. Um, I want you to, if you're wanting a tracking template, just reach out to me at support@trademasters.com. Put in the subject line tracking template. I'll show you what that looks like here in a moment. I'll have to get out of the slide to do that, but I want to make sure I can do that for you. Keep things simple, and that's how your confidence is built. No hype, just keep everything by repetition, and then trade the plan, then let the plan shape it. If someone is discouraged, remind them a plan isn't about never losing. It's about losing small, staying consistent and learning. If someone is really excited, which we have a lot of those, remind them excitement can break your rules. So the plan is to keep excitement from turning into overconfidence, and for everyone, this is just educational. There again, there's no right or wrong. Each person is responsible for their own risk decisions. There's no other way to say it. And there's no optimal. I wish there was. Just know that we're rooting for you. We want you to succeed in that regard. And I'm going to see if I can bring over to the screen my design that I created for you guys, if you're interested in it. And I will just quickly go over this, and you should be able to see it. I'm going to stop sharing just for a moment, just so I can make sure you guys are seeing it. I'm going to share, find that here. I'm going to share this screen here and make sure you guys can see it. There we go. This is the uh, plans and inputs page for Tide Fusion dashboard. So right now I've taken one trade. It does a lot of calculations for you, but I have a trade log right here. This is an example. When you get this, just clear this out. But all the thing you have to fill out is this section right here, and all this takes care of itself. And there's no win streak because there's only one, but it will tell you. And then you have your dashboard that tells you your results. So you input here. Your plan inputs your account size, risk per trade, max trades per day, daily loss, weekly loss. These are all, I'm just setting it up. I did it quickly. So I'm risking 20 with a maximum loss of the day of 40, maximum weekly loss 120. If I lose 120, I'm done. And I haven't really set this to where I wanted it to be, but this is you get to set it. And then all you got to do is track these in the blue. That's it. And it gives you your total return, your cumulative profit and loss, equity, all of it. Okay. And then your dashboard gives you results, and you can start seeing what's happening here. Okay. I don't believe I have any errors in the calculations as of yet. You have to have several trades going on first, but it does allow you to grade your trade as well. So hopefully that's helpful to you guys. Again, there is no right or wrong way of doing this. Um, it is just about finding your plan and sticking with it. I hope this has been helpful. I hope I didn't go too long for you guys. If you have any questions, definitely put them in the Telegram for our members. Definitely like the YouTube video. Put your comments in the bottom, questions in the bottom as well. I'll be more than happy to read those comments as well. Make sure you subscribe if you're not already subscribed. Thanks, guys, and we will see you guys the next time through. Take care.